another stream of Market Buzz. I'm here with Nestor from another place again, Nestor from Malaga,
Yeah,
and
yeah, yeah,
we're
yeah.
waiting on Dimitris, but we're gonna go ahead because we have a lot to unpack. It will be a short stream, just to cover all the things we are seeing this week. So we have, of course, software stocks dumping more. We have crypto a little bit stabilized. We have some economic data to discuss, looking at some of our opportunities that we're watching, of course. So that's something we have to discuss. And of course, if you have questions, do let us know in the chat so we can cover them. So yeah, let's start with the economic data. Nestor, what have you been following this week?
So this week we had an unemployment data, right? I think it got delayed from last week, and it was a very interesting set of numbers. I was at least expecting, I'm not sure what you were expecting, but I was expecting actually for unemployment to tick up, which leads me to the question, is Trump cooking the data or is he actually fixing the economy? Stephen, Adi, welcome.
Welcome.
But yeah, it's insane, right? And all of a sudden we saw unemployment come down to 4.3%, which was like it's really good, right? Like the fact that we're not just losing jobs left, right, and center take away from the fear of recessions, which is a very big deal here, right? Interest rate sensitive took a dive, right? I think companies like Rocket Mortgages and the home builders took a little bit of a dip, but we saw sort of buying back, right? Now the rest of the market at the beginning of the day was very bullish on this data. The market liked it. The fact that we're not heading into a recession right away was fantastic news. But then the market did sell off halfway through the day, and then we bounced back at the end of the day. We are seeing the winners right now being the people that serve the data centers. The data center companies are spending the most money. We saw that Amazon, Google, Meta, Microsoft all increased capital expenditures expected for 2027, 2026, which means that money's flowing in, and you got to find the companies that are um, getting that, like, are gonna be getting that money. And right now, all of these companies are writing blank checks because they need to finish as soon as possible before the law changes. The big beautiful bill is playing a part on this. Hello, Graham. How you doing? Um, but yeah, I mean, we have GE Vernova, Eaton, um, pumping yesterday. Micron ripping it like crazy in the last couple of days. Nvidia was up. AMD was actually finding a floor from 200. Intel has found some interest here. So there are opportunities in this market, even though the Max 7 are sort of lagging behind because there's a lot of uncertainty. Cash flows are getting reduced, and investors don't like that. So there is repricing of the Max 7 here, right? Now, do I think that the Max 7s will lose this race? Absolutely not, right? But there's a cycle that comes with this, right? And the cycle has changed towards, I think, a longer dips and troughs, and I think we are gonna be having to prove whether this revenue will come, and I think it will come because software companies are showing that, right? We've seen massive declines in software, massive declines. So yeah, S&P 500 seems to be holding steady. The Nasdaq is actually lagging a little bit more behind, and the IWM finding a footing here, right? Like I think it's been beating the Nasdaq and the S&P 500 in the last couple of sessions, which is something interesting to pay attention. It just shows that there's money trying to find value in different sides of the markets. I mean, the Max 7 have been a great trade. You're playing with the casino's money at this place, at this point. So it's something to pay attention to.
Any idea why the market sold off yesterday in the second half?
I mean, it was just like analyzing out the data, right? Like in my opinion, and I could be wrong, right? Like there's still so many risks in the market today. Um, and we got to pay attention, but it's like, I mean, we're just choppy, right? Like the data is against the idea that free money is coming in, but a strong economy can hold the current valuations that we have, right? So the question is which one do you want? And I think it's a double-edged sword because it's like we want lower rates, but to get lower rates, we need to have weakness in the economy, and we just don't want weakness in the economy. We want a strong economy and cheap money, right? So the market had to like sort of rebalance and revalue, right? Companies that need to borrow money at this point, they're probably not going to get cheap money. So that's why Google took a hit, Meta took a hit, but then we saw it bouncing back, and I just don't think that it lasts because it's like it just shows like strength in the American economy. Then that's the reason we sort of saw it coming back at the end of the day. It's just the market's just digesting data. We still have CPI data coming tomorrow just to get an idea of how the Fed's going to act, but we are pricing in a no cut for March now based on the latest employment data. And that's the reality,
Yeah,
right? So
and probably won't see a cut until the half of the year.
I think that we are now pricing in a July cut, which before it was a June cut, which tells you that the person that gets in is actually not going to be able to get a cut. So this Waller guy is going to have he's going to have a tough time ahead trying to convince everybody why we should be getting a cut when the economy GDP is growing and actually expediting to the upside because of the AI investment that we're seeing, which is massive. And then we are seeing inflation potentially starting to tick up when oil starts pumping. It does scare me a little bit, right? And this is all the macro theory, right? It doesn't affect the individual companies as much, but yeah, I mean,
I
like
also saw that they were expecting inflation to tick higher month over month.
well, if you look at oil has gone from what 55 to 65, right? In the last couple in the last month and a half, right? Because of all the Iran uncertainties and just the idea that the economy is roaring ahead, right? The reception people keep calling for a recession and we just don't see it, right? Like we've been calling for a recession for the last 3 years and we've seen nothing but. So
Hmm.
you know many companies, the thing is just like, for example, Graham is saying, why is Microsoft like it's up a bit today but it's being punished? It's because there's risks, right? Like a company that prints capital, like, right, is like, or prints cash, will be valued at x at number times x, right? In this case, what's Microsoft's PE, right? Like Microsoft's PE right now is sitting at what, 30? Let me have a look real quick. Microsoft PE is sitting at 25, right? It's 25x. Now, because of their growth, their forward PE is coming down heftily to 21, right? But it takes 20 years to pay back your initial investment based on earnings. Now, the question is like, now the cash flows are changing. So the key thing here is that you have to reprice, because a lot of investors price the growth companies based on cash flows, and they were building massive amounts of cash in their coffers, but now they're spending this, and we just don't have any clarity whether this is going to be a good investment. In my opinion, it is, but I could be wrong, right? And many investors are saying maybe this is wrong, right? Even though the people that have gotten to this point are telling you this is the path to continue, some investors are scared, and we're just gonna. This is just a repricing, right? Companies still, like, yeah, it's still down from all-time highs, but there are just better opportunities in other places in the market. That's why you see companies bouncing off 10 to 15% after earnings, just because they missed on a cent per share, right? It's like, because it's like there are better opportunities that are gonna 20, 30, 40% beats on earnings, right? And we're getting that clarity as market goes, right? What are your thoughts on that? I think they're buying opportunities. Don't get me wrong. Like as Microsoft and
Yeah,
Tesla and like, not Tesla, sorry, Microsoft, Amazon, Meta, all of these companies go down because they're increasing the amount of capital expenditures. I think they're buying opportunity. Don't get me wrong. I continue to buy them, but I am also placing bets in different companies.
I think we need to have a clear separation of the strategy for each other. Like I'm more focused on buying companies cheap, undervalued for the long term. I don't care if the price drops for a few months. I know because the earnings are growing, the revenue is growing. Eventually, the stock price will grow as well, and it will catch up. So that's how I'm viewing my portfolio. On the other side, you have traders like yourself that are trying to catch the trends,
Yeah,
the moves. I'm doing the same a bit with my PepsiCo trade. I mean, it's been going
it's been
very
ripping.
well.
It's been
So
great.
it's it's one of those trades where you know, okay, it's very undervalued and overstretched to the downside. So I'm taking a position in it, and now it has gone up. So I would say I'm waiting for a retest, maybe to test the lower supports here at let's say around 160. That's a decent level to take a position again for the next leg higher, because I do think it's one of those sectors that is free from all the AI fears, where You have software stocks where there's fear about the AI collapsing the software sector, or yeah, just the AI bubble fears. You won't
Yeah.
see that in boring stocks like PepsiCo. So I think for 2026 we might see the trend moving higher, but it's just being uh, up and up for the last few months. So I think it needs to consolidate a little bit here right now. So there needs to be a difference for you to say, okay, am I going to invest for the long term? I think growth will always be important for a portfolio because that's what leading the market. But we are facing a year where it's known to be a bumpy ride. Like
Yeah.
midterm years are very bumpy. So I think this year is not gonna be good for growth, and we might not have seen the worst yet, because midterm years have on average around 16 to 15% drawdowns. What have we seen so far? And everyone is
Major
freaking out.
drawdowns. Major draw. Well, the thing is like
So
in the
far,
big index,
so
we've seen
far we're
nothing.
down.
Yeah.
We're down 3%. That's the max drawdown this year. So
No, we've seen nothing. Like in the
imagine
Nasdaq,
it does
S&P,
something like this.
like at 20-30%. Yeah. And but funny
Back to
enough, if
6K.
yeah, but if you funny enough, if you look at the Max 7, like we're talking about Microsoft peak to trough, we're talking about a 27% decline, which is a major
Already.
number. Yeah. It's insane. Right? So it's like if we look at companies like Nvidia was sitting at 220. It went down to all the way to 170, right? It's like we are seeing revaluations, we are seeing corrections, and this is fantastic for a healthy market. That's what we got
Microsoft
to
did a
consider.
40% correction in the 2022 bear market.
Yeah.
If it did a 40 correction right now, it would be somewhere at
Around yeah.
330.
I don't think we're gonna see that because the thing is like a lot. Like we are saying, like the investors are saying, "Hey, I just don't want to be like, I just don't want you to use my money to spend it on this. That's it, right?" It's like, but they are still spending it. They're still fighting it. Google just came up with 100-year bond, which is like reminiscent to the Motorola times. Motorola, I think in 1997, did a 100-year bond, and how did that pan out? But that was 3 years away from the bottom of the bubble or the popping of the bubble. So it tells you that we might still have a really long time for it to run, right? At least that's my opinion. It's like I just don't see it. Like I think right now we are in a capex cycle, and I think there is a misunderstanding on how the build out is happening by investors. Investors are just saying, "I'm just scared that this is that we're just not gonna continue to get double-digit returns year on year on year on these companies." But I think we are. I mean, the companies continue to outperform and continue to beat expectations every single quarter. Tell me I'm wrong, Timothy. Tell me I'm wrong. So if you can get
Nope.
companies like this at cheap,
That's what I'm doing.
yeah.
Mimi is
I
there.
like
Hi,
like I
Mimi.
agree. We are in a market where you have to pick your winners, right? And you're gonna get some things wrong, and that's okay. But if you're a long-term investor, 10 years from now, it doesn't matter, you know? So it's like I think so too. Yeah. It's interesting how just risk on assets like Bitcoin and alts have just taken a massive tumble just because like it's like and that's when Mimi comes back, we'll definitely get her thoughts on this. But just Bitcoin and Ethereum have acted as a sort of indicator, but it follows a way like very similar to the tech plays, right? So like this is super interesting. Like I'm liking this levels. I put a buy box on my Bitcoin chart. I continue to
So
buy.
so you're like DCA.
Yeah, I'm dollar cost averaging, and at these levels, I mean, I entered at 80, and I've been buying since we've been coming down 80, 90, right? So it's like I'm happy. I think I bought it even on eToro. I bought 100k, 110k. Like it's like the thing is like for me, like I believe in the systems, but also I'm not super heavy on it. So it's like I'm okay taking the hit as long as it need be, but it's a risk I'm willing to take in my portfolio because I know that there are other companies that short term could pay out. But yeah, Bitcoin right now
A
at these levels.
50% discount is already pretty neat. I'm not sure if this is gonna be the bottom, but do we really care if you're gonna buy here or maybe at 50 or at 40? You know, Bitcoin is likely to make new highs eventually. Maybe not this year, but eventually over the next coming years, we will see new highs. It's just how it's been, and as long as it's showing an uptrend on the longer time frame, you can bet on it that it will. And buying here at 70 or 60K in a few years with a double, you're outperforming the stock market. So for me, yes, as a long-term hold, it's definitely a buy. Now, do I think it will go lower this year? Personally, I am on the opinion that it will. The year is still long. I mean, we're not gonna trade sideways for 8-10 months. So I
Yeah,
do think there will be some volatility. The thing is, we had a decent flush here, and there was a good response where the the move was closed well above where it had the low. So the low was around 60K and it closed at 70K. That's a 10K gap. Okay, so that's a something to note. So maybe we'll form here a higher low and then move higher for a new macro lower high somewhere here. So it would be something like this, where it moves higher. I'm not sure if it's gonna test 100K, but somewhere here, and then move sideways for a while. That's honestly my base case, that it does move sideways during the summer months, because that's usually the boring times, and they always say selling may go away. So somewhere in April, a top, and then you should just close your eyes and look at other things than crypto.
yeah. It's
And
interesting
then
because this sell in May and go away has not worked for the last couple of years, eh?
for Bitcoin,
For I think for markets, like overall markets. Like right now, this year, it's still not working because markets have still not found like we're still coming down from since November, at least S&P and stuff. But continue. Sorry.
no, I was thinking like how low can it go,
Well,
Bitcoin.
we have heard by some trusted sources 48 to 40K potential.
So we went 77-78% down last cycle, and this cycle we're down 52. So imagine if it goes maybe 70, then we're already at 37K.
I've heard 40. I've heard 40. It's in the cards. You know what I mean? It's in the cards.
And from here to 40, it's around 40% drop.
Still,
Yeah,
that's the thing. It can always go
in
lower.
in crypto that's nothing.
Yeah. The thing is like, like for the longest time, we didn't have that much volatility, or we just had volatility to the upside. And maybe Bitcoin investors got a little bit too comfortable, right? And it was like people just got used to the idea that maybe the asset class has matured. But the reality is like the volatility is still here. If you're willing to ride the momentum to the upside, you gotta be willing to ride the momentum to the downside. It is a possibility, right? Like the potential of Bitcoin dropping another 40%, it can happen. You know what I mean? It's a reality, right? But also it can give you the returns it has given you in the past 10 years, right? So like that's the thing. For me, I agree, right? Like I think there's definitely opportunities coming. And like there are opportunities everywhere. Don't get me wrong. There are going to be opportunities everywhere. It's just a matter of understanding and make sure that you understand what you're investing in and the possibilities going in and going out. That's for sure. Let me ask you, Timothy, what's on your desk right now?
Mm, yeah, I'm still looking at software. So the one stock that I'm really eager to keep on adding is ServiceNow. just because it's such a strong company. If we look at earnings, they never miss. Look at that.
Nice.
And if you look at the financials, revenue, it's always growing. This is perfect for a company. Um, Earnings as well. If you go annual, forecasted to keep on growing. I mean, that's textbook fundamental strongness. So
Yeah.
this is
Did you?
something I'm willing to buy until it drops
Yeah.
lower.
Did you see that Datadog, D-Dog?
The
I didn't trade
price,
it. I didn't trade this D-Dog. So it's a, I believe it's very similar business. The company pumped like crazy after earnings. They beat expectations, you know. So these are companies continue to get beat up because of the expectations that they will not. And I think this is a misunderstanding of what software is, right? It's like this takes me back to, you remember when I was talking about Google and how Google was the gates of the internet for the longest time? Like I kept saying that
mm,
joke. It's like, oh, Google has been the gates of the internet, and every time you went through those gates, they gave you free cookies. All of the professional data that the companies have amassed, you know, on, like, do you think they're not going to be able to create good AI in these things? Like, right? Like, if AI is making software obsolete because it's easier to become, do you think they're not going to hire people and develop? There's going to be winners and there's going to be losers. I think I wrote it in our group today. I was saying there's going to be $1 trillion companies, is going to be the norm now in software, and there's going to be a lot of losers. If you don't adapt, you die, right? The question is who wins. But there will be companies that take advantage. For example, like Adobe. You're going to tell me that Adobe doesn't have like a massive data pool where they're able to create all of the AI coming into the future, and they're going to be able to develop and their the customer base in order to take money and reinvest into the right software solutions. It's outrageous. So I'm looking at opportunities here. Adobe right now, a gift. My opinion. I could be wrong, but a gift. You know, and there's going to be many companies that their moats will continue. Yeah, maybe they'll get degraded, sure, but the question is like, are you going to go into another company that has a small moat and then maybe disappears in 12 months, or a company that has
the
been
thing
in the
is,
market for so
the,
long?
what we're seeing right now is very sentiment driven. It's
Correct.
not really based on
Proven.
fundamentals anymore.
Yeah.
So when investors are throwing everything out, and fundamentals don't matter anymore, you see something like this where a whole sector is just dropping for no reason, similar to the financial sector in SPGY. Have you seen the drop? Like, this is a strong company. I mean, they own the SPX ETF. All right, so um, provide data, and they think cloud code or any other AI is gonna be able to provide this data, but no. I mean, they are uh, there's businesses attached so hard to this software that it's impossible to just switch. So for me, I've been buying S&P Global as well. I will continue buying it if it drops lower. This is
You
an
know,
overreaction.
it's crazy because I just didn't I didn't pay attention to this company until it on the S&P map it was so red, and I was like, what is this? And like, because you've seen like the volatility right now in the markets because of all of the ETFs, leverage ETFs, and the amount of margin there is out there. The volatility and some of the moves is insane. It's insane. Like the fact that you can get a Microsoft deleting almost $500 billion worth of market cap in a day tells you how volatile this market is. So you got to be careful. You know what I mean? It's like, if you look, the thing is like, it's almost like, if you look on top of the water is calm, but inside there is like such a shift in market valuations. Like the S&P has barely moved,
Look
but the
at this.
companies within them,
Sideways.
yeah. So we just been chopping, but it's like we are seeing money move from point A to point B, point A to point B.
Same for Nasdaq, actually. I mean, This is sideways.
Yeah. By the way, I'm going to tell you. So this is the cycle that I saw, and I could be wrong. So right now, this is the way that AI plays out. And by the way, this is taking this with a kilo of salt. This is the way that I think it will play out. We're going to see right now an investment in infrastructure. Why do we see investment in infrastructure? Because these companies have the visibility to say people need this. What we're going to see is software start to take that, right? So data centers are not going to be making money for a year, 2 years. But what happens after 2 years? All of the clients are going to be using your products, and you're going to be able to say, well, sirs, we're increasing prices. And that's all going to be earnings. That's all going to be earnings. It's the software play. You give the software for really free. I mean, Riverside, the software that we're using for this for the program today, they're giving us a program that is really cheap. They're probably losing money on every client, but then they're going to hack up prices, and we're going to be so accustomed of using them for streaming and all of their services and all of their products and all of the editing and AI and blah, whatever, that they're going to be able to charge us whatever they want, and we were not going to be able to say no. I mean, maybe you can try to change it, but if your whole infrastructure is based on that.
We're
Yeah.
getting a lot of comments. I like it. So keep them coming.
Dimitris, he should be coming. He should be coming. We'll see. Yeah, people are asking. Dimitris is needed because we wanted to understand. I want to get his reaction on the unemployment data. Because yeah, I go back to the same question, Timothy. Is he cooking the numbers or is he fixing America? I just don't know. I just don't know.
Dimitri said he was fixing.
The thing is just like, yeah, I think he did say so. I want to get his thoughts on, but I think he might be stuck in traffic somewhere. So, send him a message on eToro and be like, I can't believe you missed Market Buzz. This is outrageous. I only come for you, Dimitris. If you say that to him, he'll love it. Even if one person says it, he'll be like, oh, for sure. He's eating a kebab. He's putting a table on top of a table.
What's on your desk, by the way?
On my desk, so interestingly enough, it's like, so I'm scared of NVIDIA right now. And I was telling you this before the earnings. And I was actually thinking of reducing my NVIDIA position a little bit, but continuing to put that money into AI. I'm not looking to place more money into the AI infrastructure play. I'm just looking to diversify. And I've been diversifying. I haven't been doing it on my eToro portfolios because it's like I'm still holding companies for the long term. But there have been a couple of companies that I really like. So companies like Vertiv, companies like GE Vernova, companies that will take advantage of the current cycle. So right now we're seeing Micron be in a very interesting position where they hold, I think it's like 25% of the memory supply, and there's just no way to get supply online for the next 2 to 3 years. So all of a sudden, their margins are increasing because they're just able to charge more money for the same products that they have. And yeah, we're going to see that being alleviated, but 2026 and 2027 are not going to be the years where that happens unless capex gets reduced. So we know that the demand is there. And the question is which companies are taking advantage of this? And the thing is like there's GALW is another company that I'm paying attention. It's a glass company. They produce glass, and they've weathered the major recessions in the past, and they make the fiber cables with a specialized glass that are, and they're like 95% of the market. So it's like you all of a sudden you have companies like this that have like diamonds in the rough that have just been cut in this capex cycle that will just increase based on the current production that they have. And if they decide to increase production, great, but people have to compete. Companies like First Solar right now taking a major hit because of the fact that Elon wants to potentially produce solar panels. Really? That tells you that there is a market right now for solar panels, and Elon wants to take advantage of this. So what are we talking about here? It's like, for example, Fluence. Fluence makes the batteries, right? I think they're the second biggest battery producer in America. $4 billion in sales, or $3 billion in sales, right? Company took a 30% hit because you don't understand the fundamental story that Fluence has. And the fundamental story is that all of the contracts for 2026, everything they produce is sold. They are going to refinance those contracts they're going to re-sign those contracts at the end of 2027, at the start of 2027. So what happens in 2026? You're going to be signing contracts with 30, 40, 50% increase in margins, your earnings per share is just going to blow, right? So company like, no, Fluence. So it's FLNC. Right? This company took a 30% cut because they missed earnings. Great. It's contracts. They're having delays in production. Sure. They are one out of the three manufacturers of batteries in America right now. Right now, there are data centers today, finished, ready to deploy that cannot connect themselves to the grid. You're going to need batteries and you're going to need energy as fast as possible. People are willing to spend an eye and a leg for this. They're writing blank checks. The contracts are not done, but they will come. Company shorted around 38%. Ownership is 55% management, 55% institutions. Bloom Energy is another one that Mimi's talking about. Dragons. Yeah, today's episode of How Fucked Up is Fucked Up. Today is fucked up. But yeah, so we are seeing opportunities. The market is giving them to you, right? I wrote that company from like Fluence. I wrote it from 7. Yeah, I took a major hit. Could it continue to go lower? Maybe I got this wrong, but it's money that I'm willing to lose here. You know, and like for example, like
Maybe for the watchers, like when you're taking a trade, how much of your portfolio are you betting?
so it depends, right? So for me, it's like if the more conviction I have and the more I understand, I'm willing to go 10%. Like if you look at my total portfolio, you can see my breakdowns, right? So if I have real trust in a company, stability, what I know I can produce, I'll put like 10 to 15% of of my portfolio. But if I'm not sure, but it's a company that can 10x, like Affluence, for example, you gotta look at my portfolio. I feel so naked. for like Affluence, I'll put 1 or 2%, right? And worst case scenario, I'm wrong and I lose 1% of my portfolio, and that's okay, right? Because it's a risk I'm willing to take. But if this company 10x's, it becomes 10% of my portfolio. So there is a possibility there, but it's also a possibility that it drops 50%, right? So there are bets where I'm taking a major hit, but you manage by the risk profiles, right? So it's like for me, I manage risk by position sizing.
You bought Ethereum,
That's too expensive. Don't get me started. I bought Ethereum
but
at the dip, and it just kept dipping.
are you buying here?
I'm planning to, but the thing is like I need to raise a little bit of cash. So that's where my selling of Nvidia could potentially come in,
You're gonna
right? So
sell Nvidia for
I'm
Ethereum?
I'm actually I'm actually thinking of reducing my Nvidia positions. Yeah, a little bit. Like the thing is like I trust me, I believe Nvidia to continue to do well. It's still going to be 10% of my portfolio, but I think right now it's sitting at 13. So I'm looking to potentially trim and then rebalance those positions, right? But the thing is, it's like before the earnings, right? Because I'm expecting the company to rally up to earnings and then potentially blows it out of the water and expectations go through the roof, which is very likely, right? But every single in the last couple of earnings, the stock has just come down right after earnings, so we rally with euphoria, and then just before it's a selling opportunity.
But do you
But
think
I'm gonna rebalance. It's a
Ethereum is gonna
rebalance.
outperform Nvidia?
The thing is like, but look at Ethereum, right? Like go back to the Ethereum chart, okay? And like Jensen says it, right? And I'm using Jensen's words to evaluate Ethereum in this case. The important thing about a network is its developers. When was the last time we got this price?
March,
Okay, and then
April 2025.
in 2021 we touched this price, right? In
This was
2021,
20.
no, but 2021 we touched on the price that we're sitting at 2K. You're telling me that Ethereum has not had any development done in the last 5 years? When the major banks are playing here and there's big players coming into the scene, like I'm not saying it's going to outperform tomorrow or in the next couple of years, but Ethereum looks interesting at levels like this. And if it touches the 1,500 that you're putting in your chart, please, like for sure, I'm increasing my
Mhm.
position, right? But because I believe in the project, right? Like I just don't think that AI is going to come in and create a better Ethereum from today to tomorrow. AI is great. It makes great developers in, you unfathomable the growth you're seeing. But the reality is completely different. I just don't think that you're going to compete with Ethereum for the next 5 years. Could I be wrong? 100%. Take everything we say with a kilo of salt, but You know, if I liked Ethereum at 4K, I like Ethereum at 2. I don't think it's changed fundamentally. Could it go down? Could the technicals come down? Could the demand and supply change? 100%. I'm not saying it won't, but again, if you look at it, it's a very small part of my portfolio. So I'm okay with taking those risks, right? Like rebalancing back to the 1% that I think I could earn, and then maybe making that those 2-3x. Ethereum has not kept up. It feels like the silver trade in a sense, right? Silver has not kept up with gold. Ethereum hasn't kept up with Bitcoin.
For
Like
sure.
long term for
Let's look
Ethereum,
at Ethereum versus Bitcoin. In a way, it's still in an uptrend, making higher highs and higher lows. So could
but
say
again,
that
like this is
Ethereum
a
is
very
still
long term trade.
outperforming.
This is a very long term trade. This is on the management team. Like this is on the, it's like on the storyline of what people are telling me, how the banks are coming in and placing, like the amount of wallets that have been created on Ethereum in the last 2 years, right? It's like the network value is still increasing on Ethereum, my opinion. So are we gonna get more? I mean, like, yeah, maybe somebody comes in, but it's like again, it's a risk I'm willing to take. Now, am I gonna sell all of my Nvidia to buy Ethereum tomorrow? Fuck no. Right? Like I don't have the same amount of certainty I have with a company that has earnings, results, and every 3 months I have the CEO telling me this, and this, and I can keep up and I can like corroborate their story with every single other company. It's a whole different
I,
story.
I did want to say one last thing and then I have to go. So
Okay.
Micah Saylor yesterday had a call on TV, an interview, and they were asking him like, how low should Bitcoin go before you become insolvent? And he's like, I'm never gonna be insolvent. I'm gonna keep buying where it goes to 10K or 1K. I will take that to basically keep on buying Bitcoin.
Yeah.
And then she asked like, who's gonna lend you money? Because at the end of the day, he becomes the bank of Bitcoin. So it's a risk if he is the only one buying Bitcoin. So I'm not sure. Also, uh, do we have other players that really want him to be liquidated?
A
Sometimes you
hundred
have
percent.
this nasty game going on as well, where
Oh,
you have people hating on each other, wanting to see people fail. Could this be the case for him in the future? But
yeah.
we 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 know Bitcoin is moving higher in the long term, always, every cycle. So it's some kind of belief system, and if you know that this belief system exists, you can buy high and buy and sell higher as well.
Yeah.
So it's not an issue if you know how the system works. You just have to be mindful of there will be uh, years where it just goes down, and it's your choice to either hold or step out of the market. Like, I'm never gonna step completely out of the market, but at the top I had like 20% allocation. Now it's down to less than 2%, just
Like for
because. Yeah.
Yeah, for me, it's about the same. Like for me, I've always kept like the thing is for me, Bitcoin has always been a hedge against. Like I'm from Venezuela. I've seen monetary policy destroy like destroy value. And would America do it in the next 10 years? Probably not. The dollar will for the next 10 years will continue to be the dominant currency. Could I be right? Could I be wrong? Maybe. But hey, like I just a little bit in my portfolio doesn't hurt. You know what I mean? Even if it goes to zero and I lose 1 or 2% of my portfolio, I know that I'm making 10% returns year on year. That's what my S&P 500 returns are expected to be, right? So yeah. By the way, have a look. Let me have a look. Let's see if I can get there. There you go. So that's the Malaga Stadium right there. Oh
Oh,
wait.
you can watch some food.
Yeah, it was great. We watched it from the house. It was insane. It's funny because I think there were 3 goals and they were all on that side of the pitch. I didn't have to pay for the ticket. But definitely next game I'm going. Like the
The
euphoria.
Yeah, it's different.
It's like it just felt like I was missing something, and it was just like the noise because we put on the game on the TV, and the noise you could hear the roar, And it was like we
Mm.
thought it was the TV, and it wasn't. We just opened up the window.
Nice, nice. That's
So
true.
yeah,
I will have to go.
yes, nice
So we're gonna
chatting.
wrap it up.
Yeah,
Too bad Dimitris wasn't able to join.
I'll
Maybe
do an
you
episode with
can
him in
join
the
with
next
him.
couple,
Yeah,
either later today or tomorrow.
yeah.
If you have any
So
questions, don't forget to put them in the eToro portfolios. Check down the links below. Thanks so much for watching, everybody. Really
thank you very
appreciate you.
much. See you next time. Uh,